All right, what is up? REI Marketing Mastery. This is Daniel Barrett from AdWordsNerds.com. Of course, you know that. How are you guys? Hope you are doing well. Look, obviously, we're in the middle of sort of a wild time as I'm recording this. This is, let's see, March 18th. A lot of shutdowns happening. There's a lot of uncertainty in the real estate market about COVID-19, the coronavirus, what that means for real estate investors. So, what I'm going to do and what I'm trying to do this week is go live as much as possible, share as much of the data that we have about what we're seeing and what I'm telling our management clients to do. As far as I'm concerned, people in REI Marketing Mastery are our clients in the same way that our managed clients are. So my job, the way I kind of view my role here, I'm not an epidemiologist. I don't really understand about anything about medical policy, anything like that. My role is to make as much data from the online space that I see available to you guys and to let you in on our decision making process for the accounts that we manage. And we at AdWords Nerds, the way we kind of think about this is we think about what we do as falling into the fiduciary standard, by which I mean I view it as my job to do what's in my client's best interests, regardless of whether or not it's in my best interest. So, if, for example, there comes a time where I think that investors should pull money out of, let's say, Google Ads, I will tell them that. And that's kind of an ethical kind of obligation that we have. And it's something that we've done for a long time. It's something I kind of want to extend to you guys. Now, a couple just real quick, we're going to get into data. Couple quick things. One, there's for the AdWords Nerds team, like my team specifically, I'm healthy, most of us are healthy, a couple of us are a little bit sick or feeling under the weather or are quarantined, or not quarantined, but kind of we're all hunkering down remotely. We're all a remote team. Everybody's in the United States, but we all kind of work separately, so there's not a huge amount of change to the way that the team works, but we are operating slightly slower than normal, or more slowly than normal, because some team members are not 100% or they're taking care of kids or whatever. So there may be a slight delay in getting support in the group. I'm primarily monitoring the group, so just be aware of that. Second thing, but calls should be exactly as scheduled. I don't foresee anything kind of major there, but we will update you guys as we go. Second thing to keep in mind, I'm going to do another training. So you guys, some of you guys were in the micro testing training, and that kind of got railroaded a little bit because Facebook changed how they allowed real estate ads to run. We're still testing variations on the micro testing stuff, but it's very different now. So I'm going to run, I really want to do a training for you guys that's going to be something you can immediately apply to what you're doing right now, and help you kind of adapt to current circumstances. So I think what I'm going to do is I'm going to show you guys how we do in the agency space, how we do client research. And the way this is valuable to you is that I want you guys to use this on potential sellers. For one, this is a good tool for boosting your Facebook audience. And I think as we go into the next couple weeks, Facebook's going to be really busy. There's a lot of people sitting at home using Facebook. So Facebook's going to be perhaps a bigger lead channel than normal. I'm not 100% sure about that, but I'm going to show you how to use Facebook in a different way. And I'm going to show you how to customize your advertising based on what's going on right now. And that is going to be a major competitive advantage, because primarily what investors are doing right now is the exact same stuff they've always done. They're either doing it more or less. I want to show you how you can actually use the data that you have access to, because you're part of this group, to customize the ads that you do. That's certainly what we're doing on the agency side. So I'm going to break that down in a training. I'm hoping to get to that this week, maybe next week, but it'll be coming up soon. So really important kind of seller research methodology and funnel I'm going to teach. So let's talk about data right now, because I want you guys, my primary kind of point right here for this, let's see if I go big, can you see me? Yeah. Okay. So primary kind of thing for this right now is to think about what COVID-19 is doing to the real estate market right now. And, I'm not an investor, and I have less of an understanding than many people of kind of the back end of the real estate industry. What I do know is the online marketing industry. And AdWords Nerds sits on probably the biggest data set of motivated seller keywords anywhere outside of Google. We just monitor way more of this stuff than anybody else. We spend way more money on it. So we have kind of unique access to a data set that almost nobody has. So what I want to do is make sure that we share that data set with you. And I'm going to try to connect a narrative here about what I see going on. Part of my caveat for you guys is that it's a rapidly changing situation. Even the last couple of days, it's been rapidly changing. It's very hard to know where it's going to end up, where it's going to go. So it's important for me for me that right, that we're going to be updating this frequently. And I'm not trying to say that my take is the absolute correct take. I'm going to tell you kind of how I think about it and how I'm working with my clients, but you should take all that with a grain of salt. Okay, just like anybody. All right, so let's talk about what's happening. So this, by the way, so these data sets I'm showing you, this is across all of our clients nationwide, all motivated seller specific keywords. Okay. And what I wanted to do first is put the most recent kind of, let's say, 2 months in context, right? So the data line that you're looking here, this is January 2018 to March 16th, 2020, right? And one of the things that's really interesting is if you look, the blue line, by the way, is clicks. So obviously clicks on an ad. Red line is impressions, which is anytime the ad is visible, right? And we use impressions to gauge how many people are searching. Now, what's interesting is that since 2018, the average number of impressions has been gradually declining. But in February, we had one of the strongest months we've had in the last 2 years. So February had a huge peak in terms of clicks and a huge peak in terms of impressions. This is nationally, right? So really, really interesting. So while it's true that March, you can see there the last kind of segment of that line there that's going into March, a couple of things to keep in mind. One, March is almost only half over. So even though March is only half over, March actually has more impressions than October or November or December did, and that's only halfway through. So while I think we are in a slight decline in terms of number of clicks and number of searches, that's coming off a major peak. And so if anything, I kind of expect the numbers for March to be better than average. Now, of course, I'm recording this on the 18th, and it's hard to know what's going to happen in the back half of March, but just based on the first half of March, that's what I would expect. Is the kind of, social distancing and self-quarantining and school shutting down and stuff, is that going to affect that? Yes, but it's really hard to know how. It's possible. I've seen some people guess that, hey, searches are going to go up because more people are sitting in their house and they need cash and they're going to want to sell. I've seen other people say searches are going to go down. It's very hard to say at this point, but so far for March, and you got to think like COVID-19 has been an issue since at least the beginning of March. We're in a stronger place than we were even a couple months ago. So really, really interesting data there. Now let's look at the cost per click. So cost per click is how we measure cost in the AdWords market. And, obviously it's the average amount that we're paying whenever somebody clicks on a link. Now, the cost per click in March has ticked up slightly to about $6.67. That's up from February, it was about $4.50. So again, about a $2 increase. That's not nothing, right, for sure. But you have to remember that in December, we were paying about $12.50. So December was actually a pretty big peak in prices, and we have come down significantly every month since then. So although we're finally ticking up again in March, it's about half of what it was in December. So really interesting number there. Whoops, didn't mean to do that. Really interesting number there. Some of this is going to be simple regression to the mean. If you had a really good March and February, you expect it to tick closer to the average in the following months. And I kind of see some of that happening. I do have a reason why I actually think the price is increasing slightly for us, even though my guess is that the total amount of competition is going down. I'm going to talk about that in a second, but just keep that in mind. There's a slight increase in price, up from $4.50 in February to $6.60 in March. But again, December was $12.50. So, we're up again, but still significantly better than we have been. Now let's look at conversions. Obviously, it all matters in conversions. Conversions are really interesting. So conversions here, by the way, this is weekly data here. I switched from monthly to weekly data. just to show this improvement. And what's really interesting is that conversions are actually ticking up. So even though February had a peak, was a peak month in terms of impressions, and a peak month in terms of clicks, and a peak month in terms of the lowest possible cost, we actually have more conversions in the week of March 9th than we did in February. And so in any of the weeks in February, I should say. And significantly better than we were doing it in, like I said, October, November, December, which were pretty slow months nationally. This is, 227 leads in this week for our clients. So really, really interesting number. And when you put all that together and you say like, okay, well, impressions ticked up, or, they're ticking down slightly, but they're still significantly better than average. The clicks, same thing. Cost is up slightly, but still down from where we were. And conversions are up, like more leads are coming in. What is the deal with that? Well, here's what I think is happening. In times of uncertainty, almost always, what tends to happen is that people pull out of markets, right? If you look at the stock market, for example, you think about what happens there. Like we get into a period of economic uncertainty. People pull money out of the stock market. Now, rationally, right, that's the wrong move, right? If you look at any economics textbook, right, someone's going to say that, no, you're supposed to buy low and sell high, right? But if you pull out when everyone's uncertain, you end up selling low, which is the worst thing you could do, right? This is how people lose money in the market. And everybody theoretically knows this, and it happens over and over and over again. Why is that? Because just as people, right, as human beings, when we get into uncertain situations, we tend to freeze up, right? Like if you're like walking in your house in the middle of the night and you like go into the basement and you hear somebody be like, the first thing you're going to do is freeze up. Right? That's the very first thing that you do. And we do this kind of at scale, right? But the first thing that we do when we're in a weird situation is we wait to see what's going to happen. It's just like that's our evolutionary response. And so how does that affect marketing? Well, in markets and stock markets and this, anything really, when people get uncertain, they want to kind of tense up. The financial equivalent of that is sitting on their cash. They want to just have the cash, right? And so people tend to withdraw spend in marketing. They tend to withdraw spend on investments. Even though theoretically they get that that's not the right move, it's still what they tend to do. And so even though I don't have a lot of evidence for this, my guess is that what's happening is that other investors are pulling money out of the marketing business a little bit. So like you can see there's less mom and pop investors. My bet would be that like companies like Zillow and Trulia and Redfin, they're pulling back their spend a little bit. And so what's happening is that there's less competition for example, Google Ads, which is the data set that we're looking at, right? So when there's less competition for Google Ads, what happens? Well, all our clients, right, we have not changed our strategy yet. So we're still going after it with the same exact bids, same exact budgets, et cetera. When you do that, what ends up happening is you are buying the same dollar amount of stuff, but everything's cheaper, right? So imagine like if you went to a candy store and let's say you buy $100 worth of candy every day, or every week, I should say, right? So you go to the candy store, you buy $100 worth of candy every week, and the candy is normally $1 a piece. So you go in, you buy $100 worth of candy, that's 100 pieces of candy, right? $1 a piece, cool. But then the next week you go in and there's a run on candy and everyone's freaking out about the candy market. Candy's only 50 cents a piece. Well, with that same $100, you can now buy 200 pieces of candy, right? Same amount of money you put into the market, but you get more out of it because prices as a whole went down. Pretty much the same thing is happening in Google Ads. What's happening is there are less competition, people are bidding things up less, and there's less competition for like the kind of the best spots for your ads. And so same amount of money is getting you a little bit higher up. But what ends up happening in Google, because it's an auction, if you, for example, let's say you were hanging out number 2, and you don't have anybody below you, let's say, for this keyword. So you're just number 2, you're all by yourself. As second ad position, your competitor, Joe Blow Real Estate, is number 1, okay? Well, whatever you bid, right, if it's not getting you to number 1, it doesn't really matter because your price is really set by the person below you who bids you up. So let's say you're paying $1, right, to get in position number 2, and Joe Blow's got to pay $5. Let's say Joe Blow drops out of the AdWords market, just drop out altogether. He's not there anymore, right? So you bid $2. Boom. Now you're position number 1, right? But if there's someone below you now that comes in and is a position 2, whatever they bid bids you up. So let's say they get you all the way to $2. So even though you're in a better position, you're still paying a little bit more. Everything is overall cheaper. I hope that kind of makes sense. In any case, the only kind of takeaway you need to take away from this is basically what's happening here is there's less competition, meaning that the people in the market, essentially the positions of their ads are shifting up. This is again on a national average, right? The positions of their ads are shifting up. That's shifting up their prices a little bit, but overall the market price is down significantly. So what does that mean? I mean, if you look at like Facebook usage numbers, you look at cost per click in Facebook, those numbers actually looking really good. If you go on like the Facebook ads, Facebook groups for like people who run agencies like me, people are like, tons of money. They're putting tons of money into Facebook ads, right? Why? Because everyone's home. Everyone's home. So the supply of people to show your ads to is way up. And when supply goes up, costs tend to come down. Okay, so cool. Things are getting cheaper. There's a lot of people to be had, a lot of leads to be had. I don't see a decline in lead volume, right? I do see slight decline of impression, but like we're still higher than we have been. So for me, if COVID-19 was not happening, if there was no virus happening, right, and I saw these numbers, I'd be like, it's killer month. It's going to be killer month for our clients. We need to go after this really hard, right? Because just in terms of what ads are doing, and I'm not saying this is going to, like I said, I'm not saying this is going to stay the same. I'm not talking about anything on the back end of the real estate deal or whatever. In terms of what the ad markets are doing, everything looks great. So the question is, what is going to happen, right? And what would have to happen for you to either withdraw or reduce your ad spend? Look, I don't know how to answer that. Honestly, what I'm saying to my clients right now is we are holding the line. We're continuing to spend. We're continuing to put money into Google Ads because there's still a ton of leads there. There's still money there. We haven't seen any evidence, and this would be the one thing that would change my advice, right? Well, a couple of things would change my advice. One, if our clients couldn't close for whatever reason, right? So everybody dropped off, everybody stopped signing, you couldn't go see the house, something with the county law office or something happened where you couldn't get the property under contract, something like that. If that started to happen, we would probably start to reduce spend, right? Or if there was a massive spike in cost in Google Ads, hasn't happened. In fact, costs are down. Or if there was a massive drop off in conversion rates, right? Hasn't happened. In fact, those things are up. So for now, all I can tell you is that if you are doing Google Ads, I would recommend that you keep doing it, but I would watch very closely what happens in your business on the back end. Because really what this is all about is turning leads into deals. If we can't turn leads into deals, the leads aren't worth a ton, right? However, this is a really good time to get out and do some stuff for your SEO. If you are not posting stuff, on social media, on your blog post about how coronavirus is affecting what you do, you should, all right? Get out there, help your community, let them know what's going on. Let them know you're still buying houses. Let them know that you can do a virtual tour if you can, right? Whatever you got to do, put something out there. Right now, what I'm seeing is a lot of people stepping up and putting out content to help the community, and they're getting a lot of authority for it. Partially, that's what I'm doing. I'm doing this, right? Partially the reason that I help you guys so much. I mean, one, you're my clients. It's my job, right? But also part of the reason that we're trying to share a lot of our information publicly is because, one, I think it's our responsibility to give back to the community that helps us. But two, it positions me as an authority, right? I'm the one who kind of has access to the data. It's up to me to kind of do that and kind of put myself in that position to make sure that people get the value out of it. So you get what I'm saying. You can get some SEO benefit there. You get some social media benefit there. I wouldn't withdraw from your marketing spend if you're doing it. If anything, maybe put some more effort in SEO. But right now, ads are doing well. And if you're not doing any Facebook ads, this might be a good time to try it out. Now, Facebook ads for investors are very tricky because they put you in the special housing category. And I don't have a great answer for that yet. I have not seen, and I'm telling you this honestly, I've been trying to do like a Facebook masterclass for the REI Marketing Mastery for the entire year. And I have not seen anyone have a really valuable, reproducible approach to Facebook ads. We do Facebook ads for clients all the time. The performance is very up and down. I'm only going to give you guys that stuff if I think it's going to work. And right now, it's hard to argue that it works super well. I don't see any investors. I mean, really, people make claims all the time. I haven't seen the data to back it up at all. So Facebook's at a very weird point, but it might be worth giving you a shot. Throw it a budget of $100. and see what you can do. I would not, by the way, do not run any boosted posts. Do not run any paid traffic on Facebook to anything that's coronavirus related. A lot of that stuff is getting taken down. So do not do anything like that. You can write the post them on social media and stuff, but I wouldn't boost anything that talks about coronavirus. Certainly nothing that mentions it specifically. You can do stuff like, like in these difficult times, here's how we're whatever. You could boost a post like that, for example, to everyone in your zip codes. That might be a good way to do it, but you can't talk about the virus specifically. But other than that, what I'm going to do is I'm going to keep doing regular updates. You can watch this space. Let me know what you think. We're going to do the seller research thing. That's going to use Facebook ads. And we're going to push this to really have you guys be able to adapt, because I do think this is kind of like pretty important world event that's going to change the way a lot of things work. And I think part of what is going to determine how we come out of it, in terms of you, me, and everybody else in this group, right, is how we adapt to it, how we change what we do. And a huge part of that for me is, okay, how does this change the relationship between an investor and a seller? I don't have a great answer for that. So we're going to use the tools at our disposal. We're going to get out there. We're going to ask people. We're going to run cheap ads. We're going to figure out what happens. We're going to use data to show us what gets people to move and make their decisions. Because I will tell you, no matter what, people are still going to need to sell their houses. None of that's changing. And, in the investing kind of masterminds that I'm in, people doing 100 deals plus a year, a lot of those people are looking at this as, this is go time. It's their opportunity time, right? A lot of people remember 2008. A lot of investors made it. A lot of investors lost a lot of money in 2008. A lot of investors made all their money in 2008, right? How do they do that? They held on to cash. They were ready to move into the market when it sort of bottomed out, and they did that, and they made a killing. So a lot of investors, the savviest investors I know, are thinking that way now. But when you're in the moment, it's hard to know, man. It's hard to know when it's go time and when it isn't. So what I'm going to do is I'm going to make sure that you guys have access to all the data that I have access to. Anything that I read that I think is important, or that we test that I think is important, I'm going to pass it immediately on to you guys. It's going to be a little bit faster data flow here. Calls are still going to be in place. Use the calls, use the team to make sure that your marketing stays at the top of where it needs to be, that it improves, that we take advantage of what's going on in your marketplace. And as always, let us know if you have any questions. Post here, tag me. Like I said, some members of our team are a little under the weather or kind of taking care of kids, so we might be a little bit slower than normal, but tag me. This is why you're in the group, so you have access to literally the world's best team at doing this stuff. So as always, guys, stay safe, stay healthy. I really appreciate you, and I will be talking to you very soon. All right. Cheers, everybody. Bye-bye.